and announced that their sales were down. Okay. And then the market went down, pushed hard. But the key thing about it going down, it didn't take out Monday's low, which was 68.02. Now the market's fought its way back up here at Genesis. We're about to find out what's going to happen the second half of the day. I thought we were in store for a big day, but it obviously different plans and you have to adapt. But that's that's my take on what I saw. And we're going to have lunch after this and we'll see where we go. But welcome to T-Buzz Train and Trade. And, how's everybody doing? Let me ask that question. How's everybody doing? Can y'all hear me okay? Okay, good, 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 good. We're down in the room. We have it at the clubhouse. Carrie and I's got this big room, big TV, and we're just having a good time as we go through the day. Now, Jonathan, are you here?
I am, Tom. Sure am.
All right, let's risk involved in trading. We saw a little bit of that this morning. Okay. I'm getting a BLT for lunch. You know it, Neil. I already ordered. And Carrie's getting one too. Hey, Bill. In my opinion, I still think the ultimate outcome, once we get above 68.75 area, we're going higher. But it showed you just how fragile the market was that 30 minutes it sold off. It dropped 30 S&P points and now it's recovered. Okay. Love this BLT. That's my opinion. All right, so today is Wednesday, and we're going to talk about January, looking ahead to January. And I've asked Jonathan, I'm about to call him an artiste because y'all agree with me, our slides have been upgraded since Jonathan's been doing the slides like this. I think the slides are wonderful. Put you in the right frame of mind and all that. So I'm going to turn it over to Jonathan, and we're going to go through this, and then I'll pop back in here after he finishes this. Okay?
Thanks, Tom. Yep. Thanks for the feedback here, everybody. Hey, let me mute you there, Tom. And I'll turn your video off too, and then we can have you come back on here afterwards. Oh, if you've been tuned in over the past several, since I guess it was last week or maybe the late in the week prior to last week, I was definitely in town. So it was 2 weeks ago. I had the great privilege of Tom getting Jeffrey Hirsch on to our training trade, and he talked about the Stock Traders Almanac and how the market rhymes year after year after year, and really a fantastic session. Check the YouTube channel for that recording. Go to dtitrader.com/YouTube. Let me scroll back to this so you can see on the screen. dtitrader.com/YouTube. And on that YouTube channel, you'll find the train and trade from a couple weeks ago with Jeffrey Hirsch. And it's labeled such, special guest, Jeffrey Hirsch. Well, we're going to expand upon that from all the knowledge and insights that he and his father provided traders over the years. Today, we're going to look ahead to January. But the Stock Traders Almanac is where this information comes from. I got my 2026 Almanac right in front of me. It's a fantastic book. We recommend everybody get one. You can find one on Amazon. You can also go to, I think it's stocktradersalmanac.com. Let me verify that. Yeah, stocktradersalmanac.com. He runs a newsletter as well. So very, very worth your time checking that out. So let's go through a few insights here. Lesson from the 2026 Almanac, fresh off the press. That's the way it looks. Got a blue cover this year. We like that. It is a midterm year in 2026, and it's typically the weakest year historically during the 4-year presidential cycle. So we need to keep that in mind. It is a midterm year. Good little graphic they had in the almanac here. So the bottom line ends up being the midterm years. Here, probably can't tell it's blue, the bottom line, but that's a blue line at the very bottom. And you can kind of see that the first 3 quarters is pretty much flat. You can have your percent change axis over here to the left. You can see it kind of fluctuates between -2 and +2 historically percent for the first 3 quarters of the year before the final quarter really kicks things into gear. This is a seasonal pattern going back to 1949, so quite a few years that are in this study here, and this graph that we're looking at here. There are all sorts and just tons of insights like this in the Stock Traders Almanac. So once again, I can't stress enough how good of a book it is. We've kind of leaned into it over the years and built upon it from our methodology as well. So Yale Hirsch, Jeffrey Hirsch was on a couple weeks ago. Yale was his father, and he devised the January barometer. And the saying goes, as goes January, so goes the year. And 73% of the time, in fact, from their study, if January is up, the year is also up. I say that's pretty good little indicator to keep in mind there for sure. We do have a slide deck today. Thanks for asking. I'll share it in the chat here in just a moment. All right, so as goes the year, so goes January. So that's a bullish January. If January is up, vast majority of the time, the year is also up. A down January does raise the odds of 3 possibilities, all right, according to historical performance. A new or extended bear market would be one, a flat market, and we've seen that the most of the time, at least in the first 3 quarters in a midterm year, or a 10% correction. 10% corrections are not uncommon, either in the first quarter or as we, typically in the first quarter in February, March is when that usually happens, but they're not uncommon. So the first 5 days is really important. Tom definitely believes in this, and there are strong odds based on the first 5 trade days of the year. When we say first 5 days, or when Mr. Hirsch says first 5 days, he's talking the first 5 trade days of the year. And in fact, the last 48 times during the first 5 days that were up, it followed by full year gains 40 times. That's like 80-something% of the time that the first 5 days are up. Well, the whole year tends to be up as well. It doesn't mean they'll go straight up. You could even see that 10% correction or more during the year. But by the end of the year, if the first 5 days of January are up, the total year gains tend to be positive as well from all the studies there at the Stock Traders Almanac. Of course, we have an exception, the midterm exception. Only 9 of the last 19 midterm years has this indicator worked. So kind of stressing from at least my study of the Almanac this morning that we are entering into a midterm year, election year, which tends to be a little rocky historically. And it doesn't mean we're due for a big decline, but need to temper your expectations in terms of the bullishness. Now, the market will prove us one way or the other. We got to keep that in mind. We got to follow the numbers. The market will prove one way or the other. But it's good to have a general framework of how to think going into the new year. That's what we're doing here. There is, they do a lot of study of the Stock Traders Almanac of, the kind of the best months span. And the 3 best months of the year, 1, 2, 3 in a row is November, December, January. So January will end historically the best 3-month span on the year. Now I want to flip over to more of our methodology and just note that the first 3 days of January are going to fall on Friday, January the 2nd. All right, January 1st is on Thursday. That's the holiday for the new year. But Friday, January the 2nd is trade day 1 of the new year. Monday, January 5th is trade day 2. And Tuesday, January 6th is trade day 3. And this is really kind of our favorite setup for the first 3 days, because not only do you get the first 3 days to form, well, you get the week's start data to form as well. I guess the other possibility would be Thursday, Friday, and then Monday. But having the 3 days finish early in the week, we can combine that with the week start insights that Tom has created. And we're set up for a very good framework, at least to trade that first week and then go from there. But those are the first 3 trade days of January. Kind of looking ahead a little bit, of course. We're just at the beginning of December, but it's always good to look ahead. Now, at the very back of the almanac, there's a pretty neat little study they do going back. I think we use the 20 years worth, and they do as well, I think, on their calendar days. But they come up with bullish days historically and bearish days. And these are the bullish and bearish days listed in the month of January. On the actual pages, there's a little bull graphic for bulls, and those days are January 7th, January 12th, 16th, 21st, and 26th. There was actually no outstanding bearish days listed in January. I thought that was pretty interesting. Finally, there's a couple notable dates as well in January. The 19th is the holiday, Martin Luther King Jr. Day. And we have the FOMC on January 28th, very end of January. Of course, before we get to the January meeting, we have the December meeting, which is next week. Wednesday of next week is the final FOMC meeting of the year. All right, for 2025. Hey, that was a quick and kind of the key points from the almanac from January. From what I understand, Tom, if you're listening, I'm hearing rumblings of you getting Jeffrey Hirsch back on. I'm sure would enjoy that. I hope we can do that at the start of the new year. I was talking to Tom the other day, and he was working up having Jeffrey Hirsch back on early in 2026. Give us an idea. Type in the chat yes if you would like to see that. I'm sure everybody would, but let's get some feedback. Do you want to see Jeffrey Hirsch back on for the start of 2026? Absolutely, says Charles. Yeah, a bunch of yeses. Okay. Yeah, I really hope that Tom can get that done. I'm sure he will, as he always delivers. And certainly look forward to that. But do you have any questions on what we've covered so far today in Train and Trade? Some insights from Stock Traders Almanac. Again, I would highly recommend we get one every year. The book looks just like this year, right here on the left. Stock Traders Almanac 2026. You can go to Amazon and find them. They're not very expensive at all, especially for the amount of insights that you get in the book. It's incredible. I will share the link for the slides again in just a moment. Thanks for asking. And then I mentioned that they do have a newsletter over there at stocktradersalmanac.com as well. We can't talk about the Stock Traders Almanac with telling you that we love the book, we love what they do, and hopefully many, many more years to go. There's the slide deck once again from today. Underscore skip. Yes, we apply all this to futures. We start everything with futures. Yep, sure do. Yeah, Pete, I look at it each month. Sure do. as we end, Pete's question was with the almanac, would you suggest we look at it each month? Yeah. That's why we purchased it, Pete. At the end of kind of as we wind down each month, we'll look ahead to the next month. Sure will. Hey, tomorrow, you got my email? Email me at Row@DTI Trader, and I can get you that link. Happy to do so. Let's go to the roadmap software for a moment here. And let's see if I share my screen over here on the roadmap. If I click on links and I go to market probabilities, this is actually, we take this from the almanac here, and it's those bullish and bearish days. And there's a question in the chat: can you show the bullish and bearish days for December? All right. And looks like got some issue with the dates, but there we go. Right there. We're on December 3rd to end this week. Looks like some bullish days. On Monday, the very bullish day, above 60 is typically what they mark as their notable bullish days. December 8th. This looks like Monday, the following Monday, December 15th. There's a Friday, whatever that Friday was. So there you go. It's in the roadmap software under links.
Hey, Jonathan,
Yes, sir.
this is a good time to go to a live market and just analyze it real quick for everybody.
Definitely.
Okay. By the way, Kerry said tell everybody hi.
Hey, Kerry. I know are y'all set for 1 or 2 days, Tom?
Just one day, just a day. He wanted to get in before Christmas, and we
Gotcha. Good deal.
the calendar, with the class next week and stuff, and he's got some business stuff he's handling and everything. But so we did it today.
All right, good deal. Hey, Tom, this is a 30-minute chart of the S&P future showing.
All right, folks, if you heard me this morning, I thought as long as we stayed above 68.55, we should go higher. That's become really the resistance area for the day. And I said, I was sort of in a show me attitude. In other words, be strong enough to show me we're going to go higher. And that's why I use that pivot number. Now, the interesting thing about that rapid sell-off at 9 o'clock, it held Monday's low, which was down at 68.02. If you take the high and low and just say, what's the midpoint of the range? Jonathan, given the midpoint of the range, I know what it is, but just approximately, but what is the exact midpoint of it, just to look at the current?
You're talking about I'll go through several here. Midpoint of the week is 68.33.
33, write that number down.
68.33 midpoint of the week. The midpoint for today is about 40, 68.40.
Yeah, 40, okay. But see, we're still contained in that big sell-off bar. What's the high of that bar? About 55, 58, 59?
Yeah.
That's what you need to take out to get some more steam back into the market. Now let's look at the two stocks, Apple.
I'll flip it over to a daily first. There's the daily.
Okay, made a new high today on Apple. It's pulled back right now. It's about where it opened, 286. Where's that? 286.21, something like that.
Yep. And
That's where it opened. If you look at a 30-minute, it came down and tested RB3's low, and you got support down here. What number is that? 285.80, something like that, 86 area. We're in support right now, okay? So it really depends on what happens on RB4, how Apple turns out. All right, let's look at NVIDIA. Okay, NVIDIA is what, 180.28 right now? 180.28?
Right.
Yeah, Nvidia's right there on the border. It really needs to take out yesterday's high to go up, but if it spins right there, it's setting up to do that. So, in other words, if the low holds today and your RB4 is positive, then Nvidia's probably saw its low. Just throw that out there, by. Those were the two main stocks I wanted to cover. Jonathan, what are we going to talk about after this?
Well, we're 4 minutes until the Genesis time frame. I think we have some new folks in the room, so we're going to talk about Genesis, the
All
Genesis
right, well, I'll
algo.
leave you on and I'll be back if I hear anything that I need to chime in. Got a big
Okay.
crowd here today.
Yes, we do. Thanks for being here. Yep. We're going to play a stream of Tom's Genesis algo program. It's fantastic insight, fantastic program. You'll want to stick around. It's a key insight during the trading day at the 11:30 Eastern time, which is when the European markets close and some new trends can develop for the day. So let me cue up that video and we'll have a listen.